very good, everyone. Good day, everyone, and welcome to my YouTube channel at Illumination Hub NG. Kindly subscribe to the channel and also don't forget to click on the notification bell so that you can be notified whenever I drop a new video. Okay, so today we're going to be looking at the commencement of a new audit. Okay, when we try to commence a new audit, so this video will address what commencement of a new audit entails, and also number two, I'm going to be introducing you to what we understand by audit engagement, and number three, we're going to be looking at what the letter of engagement entails, and we're also going to be discussing the importance of the letter of engagement. So when we talk about the commencement of a new audit, so what we are simply saying here is that we are trying to begin a new audit approach, okay, of the activities of the various steward accountants or managers of the organization towards during a given financial year. Okay, the reason being that in business, based on the complex nature of the business, okay, the ownership of the business is separated from the management of the business, and that is why there's need for accountability. That is, the steward managers are expected to give an account of whatever they have done during the financial year to those who are the risk bearers of the business, that is the shareholders of the business. So as to checkmate the affairs, okay, of the steward accountant or managers, it is expected to have a professional accountant, that is the face of the shareholders, okay, someone who can report to the shareholders on the truthfulness, okay, of the activities of the steward managers, okay, by reporting back to them on his various findings, which states that the account presented by the managers shows a true and fair view. Okay, we should understand that appointing a new auditor entails going through the various accounting records, such as the income statement, the statement of financial position, the cash flow statement, and other books, okay, of account that are quite important, okay, to the continued existence of that organization. Okay, and like we always see that an auditor is just a watchdog and not an hound. Okay, it is not the duty of the auditor to start looking around for fraud or to catch someone who is fraudulent, okay, but it is his duty to ensure that the internal control processes are in place within an organization, and also that the assets, okay, of the organization are safeguarded. Okay, this is one of the duties of an auditor. And when we talk about appointment of an auditor, okay, when the work of an auditor, that is a former auditor, okay, does not end, we cannot appoint a new auditor. And there are various reasons why we can appoint a new auditor. Maybe probably whenever the terms of the contract, okay, of assignment, okay, between the old auditor and the organization has ended, okay, or due to various reasons, the old auditor may decide not to accept the new appointment, okay. So in this case, it is established according to the Companies and Allied Matters Act that an organization must appoint an auditor to check the books of accounts or the financial reports presented by the managers during a given financial year. Okay, and when you appoint an auditor, the auditor is expected to be a professional accountant, someone who understands the nitty-gritty of preparing accounting statement. Okay, and also he must be someone who is proficient, okay, who has qualified from a given financial accounting professional body, okay, just like ICANN or just like ACCA, okay, and just like ANAN and others. Okay, he must be vast in his profession, okay, and he must understand the provisions of the law in regards to what preparing of accounts as well as auditing of what the accounts. And he must also ensure that what that he complies with all the various stated ethics and principles, okay, that guides his profession as an auditor, and he must not compromise, okay. He must ensure that his level of humility, his level of integrity can be highly relied upon, and whatever message is passing across to the shareholders can also be acted upon, okay. And that is why we are saying that whenever we are appointing a new auditor, okay, it must be in conformity with the provision of the law, and there must be a consensus that is in accordance to the law, what we call a consensus ad idem. That is, there must be a meeting of mind between the auditor and the shareholder, okay. And also this must be done in alliance, okay, in alliance with the ethics of the profession. That is, the auditor must be willing to accept what the engagement, okay, or the assignment. So what do we mean by, well, let's talk about audit engagement, okay. So what do we mean by audit engagement? When we talk about audit engagement, from the word audit and engagement, okay, it is just a form of a contractual agreement, okay, that exists between an independent individual who is a professional accountant, that is an auditor, who examines the company's financial reports, the system of control within the organization, in order to provide his independent opinion, okay, on the accuracy, okay, as well as the compliance of the financial statements presented. That is, on the financial statements presented by what? By the steward accountant, in order to what? To ensure that he's able to gather his evidences, is able to check if the internal control is weak or not, or strong, okay. Is able to form his independent opinion by reporting back to the various shareholders or stakeholders on his findings, okay. If truly the accountants have prepared the accounts in line with generally acceptable accounting principles, as well as in line with various international standards, okay. And this is engagement, okay, is a contractual agreement that starts from one particular a given financial year to another financial year based on the terms of the contract, okay. So this will eventually lead us to what we mean by letter of engagement, okay. So what do we mean by letter of engagement? Letter of engagement, okay. So what do we mean by letter of engagement? A letter of engagement is simply an official document, okay, which sets or states the scope of the audit assignment undertaken by the audit, okay. It's a mandatory requirement that sets out the legal relationship between a professional accountant and also his client, okay. It is the duty of the auditor to ensure that what he prepares a letter of engagement to his client stating the scope of the work to be undertaken by him during a given financial year, okay. So the work undertaken by the professional accountant, who is the auditor, must state the fee to be charged. So basically, the letter of engagement should be provided, okay, by the professional accountant or the auditor before he accepts any audit assignment or engagement, okay. As this engagement letter, okay, sets out the various key information, okay, including the scope of the audit contract, okay, and the person to be responsible for the work undertaking, then the amount of fee to be charged, and also the other terms of the audit engagement, and when and how the work should be completed, okay. As all of this will help to protect the firm in the event of any future misunderstandings, okay, that could lead to a complaint or a claim for any professional negligence. So here is an example of a letter of engagement addressed by the auditor to its client, okay.